You're watching Business Incorporated live on Channels Television. Happy Eid celebration to our Muslim brothers and sisters out there. Hope you're having fun. Hope you're taking your family out. I hope you're feasting right now. Coming up on Business Incorporated. Nigeria's central bank issues guidelines placing daily limit for contactless payments involving wallets and QR codes. Egypt's population boom will see it become the world's top wheat importer. And the Pan-African Payment and Settlement System, PAPS, has signed a memorandum of understanding with 5 African multinational commercial banking groups in Nigeria. Hello, welcome to the program. Let's kick off with what's happening on the African continent. Most markets we track are closed right now for the Eid celebration. But right here, yesterday, we see the NGX there held on to that 60,000 level, 1.30%. That was the close yesterday. Big move for the local boss right here in Nigeria. And we see the South Africa index. That's the one that's open today. Right now, it's trading in the green, up 0.45%, 74,000 for the all-share index. Other parts we track, we see the Egyptian market is also closed yesterday for the Muslim celebrations there. It closed 2.18%. Last time it was opened. And we see Kenya closing again negative on Tuesday, down about 0.02%. And Middle Eastern markets are closed for the holidays right now. Let's move on to the UK. Right now, we have Juliana standing by right there. Great to have you, Juliana. So I saw the headline today. There are fears that Britain's biggest water company could collapse. What are you hearing about this?
Yeah, that's absolutely right. Britain's biggest water firm, Thames Water, which currently serves, Laddie, about 15 million households across the capital city, as well as the Thames Valley. They have got themselves into massive debt, which I believe this morning we found out was up to £15 billion. Sarah Bentley, their chief executive officer, she announced her departure just this morning, and then all of the issues that they had come out in the wash. We have heard from Mel Stride, who is the Work and Pension Secretary. He has asked Britons to calm down and not to be alarmed that the water will keep on flowing. But what is going to happen to that debt pile? Because, of course, we know we're going through a significant cost of living crisis in this country. Not only are people struggling to eat and put food on their table, we also have high inflation, we have high borrowing costs, and that is going to be a significant issue, because if the government do nationalise Thames Water, and that's the discussion that's going on at the moment, this debt pile is going to land pretty squarely in the lap of already beleaguered taxpayers. So that is a significant issue. Again, Thames Water, the biggest water supplier in this country, have been going through issues for several years now. So I think lots of Brits are used to seeing them in the news. Not only are they having issues, ongoing issues with environmentalists, because lots of the water that's being pumped from Thames Water is actually full of sewage. So it's never safe to drink from British taps, I've got to say. But also they have been having issues with debt. It's run by a consortium. I believe £500 million was injected into the firm last year. But certainly that money has not been enough to save the company. Probably before the end of the day, we will have some sort of bailout or some sort of nationalisation plan from the government, and they're currently locked into talks with Ofwat, which is the regulator here, as well as DEFRA, which is the environmentalist firm, and of course the Department of Work and Pensions.
I guess it's safe to say let the water flow in the UK at this point. But let's look at other stories now. UK Law Commission has stressed that the country should develop laws governing, crypto assets to ensure that it becomes a global hub for cryptocurrencies and NFTs. What are you hearing about this?
Yeah, Britain has always had a pretty complicated relationship with digital assets. We know that when the Prime Minister, Rishi Sunak, was Chancellor, he did pledge that within the next couple of years, he wants Britain to be at the centre of digital assets and cryptocurrency. But the problem is, we know that the sector is very loosely regulated, which is why at the beginning of the year, the Conservative government did commission the Law Commission to probe to see whether or not there were already established laws in the UK that would govern anybody that wishes to trade digital assets. Now, the investigation and the report is still ongoing, but we have had some lines out of the Law Commission today, basically saying, which we all knew, that the current laws of England and Wales don't look after digital assets. In fact, I believe there are two particular laws that they've cited. One is things in possession, which means gold, and the other of things in action, which means debt and shares. And so I think the Law Commission are asking the government to perhaps think about a third asset class, which would be things in digital. And if that gets through the House of Commons and then the House of Lords, then people will be able to freely trade in the UK, knowing that their digital assets would be protected by British regulators.
Yeah, crypto is still getting all the regulation attention globally right now. Thank you so much, Juliana. Always great to have your update. Thank you.
Thank you.
All right, now let's take a look at what's happening in Europe now. We'll see the EU setting the rules that will determine the legal underpinnings for digital euro. Today, the European Commission is bringing proposals for the currency and a parallel law to both EU governments and the European Parliament. Well, joining me now is Chiponda Chimbelu right there in Berlin. Great to have you, Chip. So how would the digital euro work?
Well, a digital euro would be an additional type of online or electronic payment. So it would exist alongside physical money. But the digital euro would be exclusively virtual, meaning that users won't be able to convert it into cash. And they will need to have a separate account where they can save their digital euro for payments. In the current EU proposal, it looks like users will be able to buy digital euros from commercial banks. And one of the major differences between a digital euro and, say, Bitcoin or any other cryptocurrency is that the digital euro will be backed by the European Central Bank. So it won't be decentralized. Users will have to register with their ID to get an account.
All right, but why does Europe need digital currency?
Well, the rise of cryptocurrencies and even firms like Facebook planning their own virtual currencies have put central banks under some pressure to introduce digital currencies. The EU says a digital euro could provide Europeans a safe form of money in the fast-changing digital world. And another reason is the declining use of cash. In Europe, cash payments for all point-of-sale transactions fell 59% last year from 59% last year from 79% in 2016. And more people prefer electronic payments here in Europe. So the EU wants to offer Europeans more options with a digital currency. Brussels also says it needs to come up with an answer to so-called stable coins. Stable coins are crypto assets that are pegged to other currencies. So if the EU doesn't fill the gap, stable coins or digital currencies from other central banks could do that. And the fact that China is planning a digital version of its own currency, the renminbi, is obviously also something that is a cause for concern here in Europe.
All right, thank you so much. That was Chip right there in Berlin. We'll keep tracking that digital euro right there in Europe. Let's take a look at what's happening in the U.S. Quickly now. We see the S&P 500 futures inch lower today as traders digested a broad market rally in the previous session. The S&P 500 and NASDAQ 100 futures did about 0.2 and 0.5%. And we see the Dow Jones Industrial Average, that's the one in the green, up about 0.01%. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market made a major comeback on Tuesday. This ended a losing streak of sessions. This also has created many investors to look at the economic print, which is showing a resilient economy in the U.S. The Dow Jones showed an upward swing of 0.6% on Tuesday. The S&P 500 was up by 1.1%, and the heavy tech Nasdaq took a major leap of 1.7%. Many investors are hopeful of the economic outcomes for the next few days. This is also showing that many Americans are not startled by what is perceived to be 2 to 3 more interest rate hikes by the Federal Reserve in this year. This does state, too, that we are seeing a resiliency in the U.S. housing market. The strength in this area is also showing a resilient economy, and many investors are hopeful for the future of the U.S. stock market.
All right, that was correspondent there with the details of yesterday's close in the U.S. market. Now, according to recent data by the African Development Bank, Botswana's GDP expanded by 5.8% in the last fiscal year, reflecting a strong economic performance. The CEO of Botswana Investment and Trade Center, Kleso Lebile, says that the growth can be attributed to both diamond sector and efforts to diversify the economy. Take a listen.
Definitely, that growth can be attributed to the growth of the diamond sector, because lately, as I said, we have seen a critical mass of diamond cutters and polishers coming to locate in Botswana. I think they have now taken our number of that cutting and polishing space from about 22 to almost 40 in a very, very short space of time. So that will be in the lead, I think, the key contributor to GDP. But you know that when you assess GDP, there is also a significant contribution by the government, the public service itself. I think the stability that we facilitated throughout the period of COVID.
All right, for more now, let's talk to our correspondent, Innocent Somoza. He's right there in Botswana. He's going to bring us an update. Great to have you, Innocent.
Very good afternoon to you, colleague. It's good to see you, Ladi.
Fantastic. I'm sure the weather over there is quite good at this point. I know the government of Botswana invited, international media to come, cover what's going on there. But tell us, what's happening from your perspective.
Indeed, Ladi. We're coming to you live from the nation of Botswana. They were invited by the government, essentially. They say that they want to talk to us about the success stories and the challenges that lies ahead in Botswana. You would know that it's a small country. It's an emerging market with about 2.6 million people. And of course, they said that we will indeed be talking to different ministers from different departments. They just want to talk to us about some of the things that they've been doing as the nation of Botswana. As you would know, also there's that issue of the partnership, Ladi, between government and the company, De Beers. So we want to understand how far with the process, because we understand that that particular partnership is elapsing on Friday this week. So we want to know whether or not the government will indeed increase, this particular partnership, and whether or not they will agree on the 50% that they essentially spoke about. But also, Ladi, another important issue here is diversification of this particular economy. You would know that majority of the proceeds that goes to government essentially comes from the diamond exports. But many economists, they've really weighed on this. They've warned that this particular reliance, the over-reliance on this particular sector, it does, in many respects, poses a threat to the economy of Botswana, given the fluctuation in terms of, the diamond prices globally. But we're here for the next coming 2 days. We will be talking to different ministers, asking them, What are they doing? Apart from the mining sector, are they diversifying in the tourism sector? Are they going to infrastructure? So those are some of the topics that we will be touching here in Botswana.
Yeah. Over-reliance on any sector is a big risk right now, for any country. But they're going to host the U.S. Africa Business Summit. How are the preparations going?
Yeah, the CEO of Botswana Investment and Trade Center tells me that it's all system go for that particular summit. They are indeed the ones that are ahead in terms of, putting things together. And they said that 6, if I'm not mistaken, 6 heads of state in the SADC region have confirmed to come and participate in this particular summit. Is it a big one? It's a big one, Ladi, if you like, because you are talking about, me and you have been talking about the issue of, Africa continental free trade. I guess this is another opportunity for business representatives from different countries to come here and, exchange ideas as to how they can go about this. But I know, Ladi, that one thing that is on top of the agenda is this Africa free continental free trade. As you would know, that it contributes about 50%. If you look at unemployment, it contributes about 60% of the continent's employment, and of course 80% of the gross domestic product. So just that goes to tell you that it's important for them to have this conversation. My worry is that they might have this conversation again, Ladi, and then implementation comes to a halt. So my wish is that they should have this conversation, and at the end of the day, we must see some sense of implementation from different countries, moving forward in terms of transporting goods in different parts of the continent.
Fantastic, and I trust you're going to bring us more updates as they come out from there. Thank you so much, Innocent Tomosa. Always great having you. Thank you.
Thank you, Ladi.
All right, still to come, we'll check out FX Unification in Nigeria. We'll gauge the impact for startups and fintechs right here in Nigeria. That's our next conversation. Do stay with us. Well, as the month of June winds down, earlier this month, the Central Bank of Nigeria announced the unification of Nigeria's FX markets. The unification immediately caused the naira to lose about 36% of its value. But what impact can we expect for startups and fintechs that operate in Nigeria? Joining me now is Adedeji Olowe, founder Lens Square, joining me via Zoom. Great to have you on the show.
Good to have you, Ladi.
So how would this, unification impact startups, fintechs? And there's a report that, revenue to investors in US dollars, that is gauged, that depends on, what rate, they give at this time. So what impact can we expect, because we know this in Nigeria, fintechs are springing up everywhere. How's it going to impact them and startups?
Thanks, Larry, for that question. It is actually going to impact startups significantly. And here's the reason. Nigerian startups also operate within a global community, and they report their revenue and financial metrics in US dollars. Now, look at a typical startup. Let's say they made a revenue of $1 billion last year. If they've used the old rate, that would be like $2.2 million in revenue. But without doing anything wrong, now going for like 770, you see that going down to like $1.3 million. That's like 40% reduction in the numbers they're going to report to investors. So startups are not happy, and this could have significant impact in terms of their valuation, in terms of how they're going to raise funds, because your metrics, your revenue is a function of the kind of deals or multiples you could get when going to raise funds and what valuation your company effectively is.
And the multiple exchange rate system, did it pose any advantage for startups?
Yeah, in some ways, yes and no. In terms of expenses, right, things can kind of be easier. They can move money around easily. They can have a reduction in terms of friction, in terms of reporting money. They can move in money right down through the official channels. Previously, before now, startups used to find creative ways of kind of, if they raise money abroad, they could find creative ways of exchanging that to Naira. Because if you move money in previously, and then you move it through maybe the official channels, then you are going to exchange that to Naira in official ways. So those are some of the creative ways or advantages that startups will have.
What about those the dollar virtual card operators? Will this be a plus for their business? Would they? And also, remember, merchants couldn't use Naira cards for international payments. Do you think that's going to work now?
That is going to change the shape of that segment of fintech in a very significant ways. If you recall very well, before FX became very difficult, Nigerian banks gave out in Naira cards, either Visa or MasterCard, that you could use anywhere in the world. And they really work well. But immediately that was pulled out, you saw the rise of the virtual card. Now, banks are coming back to the table. So, for example, you see like one of the top 5 banks already allow you to change your dollars to Naira at a very good rate, right from their for their channels, internet banking and mobile banking. Now, you're already seeing banks right now trying to get back into the market. And immediately they do that, the need to set up virtual cards for either for dollars or in Naira will reduce because there's an additional friction on that. Now, the only thing that these startups can hope for is to look at the time it takes banks to really get back to the market. Because what has happened is that after customers couldn't use their cards online anymore or internationally, what banks started doing was to start giving out cheaper local schemes to customers. Because the international scheme previously, even though you could use your card abroad, the banks were making a lot of money in the margins, but the cards were more expensive to operate. Now, once the margins disappeared, banks started using the local cards. Now, it will take maybe weeks or months for banks to be able to get back into that because in the last 2-3 years, banks have issued probably 20 million local scheme cards. Now, they will have to find ways to replace some of those cards in the next couple of months for them to be able to take advantage of the unification. So in a nutshell, the winners for this will just be customers because obviously being able to just use your debit card either in Lagos or outside Lagos, online, offline, is a winner for any customers. Banks will start going back to the international market and finally start making money from using their cards. Of course, the international schemes will be more than happy to get back into the game. So MasterCard and Visa will be quite happy about this. They're also one of the winners. The losers will include startups because if you are a startup previously using virtual dollar cards, it's almost game up for anybody and their investors as well. Local card schemes are also going to find a challenge because nobody wants to have 2 cards on their account, so people will practically swap local cards for local card schemes for international ones. BDCs will lose out as well because in the time when people needed maybe USD to put in their virtual dollar account, they used to buy from BDC. That will happen as well. So that is what the shape of the market will be. It will change completely. There will be significant winners and there will be a lot of losers as well.
Right. I can imagine, and I'm sure those virtual card operators will be thinking of how to pivot at this time. Well, thank you so much. It was great having your perspective. Adidiji Olowe, founder, Lens Square. Thank you so much and happy holidays.
Thanks, Ladi. See you soon.
All right, now let's look at some other stories. Now, Nigeria's central bank has issued a guideline placing daily limits for contactless payments involving wallets and QR codes in the country. The 2 circulars released recently says the CBN put the transaction limits through payment channels such as prepaid debit and credit cards, mobile electronic and wearable devices at 15,000 and a daily cumulative of 50,000 naira. According to the CBN, the guidelines conceived to ensure that participants in the contactless payments implement appropriate risk management processes and measures while keeping to best relevant standards. Financial market regulators also mentioned that any transaction above 50,000 naira via contactless payments should be accompanied by biometrics and other verifications. And Egypt set to become the world's largest importer of wheat for the fiscal year 2023-2024. It's projected to import 12 million tons of wheat, up from 11.2 million in the previous year. A report from Food and Agriculture Organization of the United Nations predicts an increase in imports due to increasing demand in Egypt, as well as the need to maintain stock levels. Comes 3 years after Egypt announced that its population had surpassed the 100 million mark, with bread a staple in most Egyptian diets, making it more important for wheat right now. And the Pan-African Payment and Settlement System, PAPS, has signed a memorandums of understanding with 5 African multinational commercial banking groups in Nigeria. According to the financial market infrastructure, these significant partnerships aim to revolutionize the settlement of cross-border transactions across Africa, leveraging on the vast network of subsidiaries and representative offices across major economic centers in Africa. Signature of these memorandums signifies a monumental step forward in the pursuit of seamless cross-border trade payments throughout the almost 40 countries covered by these banks. And that's it on Business Incorporated today. Thank you so much for watching. Remember, you can watch this again on our YouTube channel. Just flip over to YouTube. Check all our videos right there. Channels Television, that's what we're called on YouTube. And you can watch all our productions. Thanks for watching and happy holidays. Bye-bye.